Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Monday, February 12th, 5:19 p.m. Eastern Time, coming to you from San Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend over 3 months long now. You can see over here on the trend gauge, we've got the coveted 4 green arrows, market leaders acting just fine, in some cases just more than the stuff of dreams coming true if you're in a couple of the names that are just really rocketing to the upside. And then all 5 of the major indexes are above the 3 time frames that we track: short-term 21-day moving average, medium-term 50-day moving average, and long-term 200-day moving average. So what happened today, if you just take a look at the rainbow colored uh, details here, you can pretty much guess that there was some bifurcation going on. There were really 3 distinct actions that went on today. Actually, probably 4. So we'll start off with, for the third day now, small caps, mid caps outperformed, third straight day. And early, all the AI leaders, whether they were overbought or not, continued to just rocket to the upside, but just got a little stretch too far. And early afternoon, we saw a pretty severe reversal to the downside in quite a few of them. So that's actions 2 and 3. Action 4 was rotation into value, big cap value. SPYV is the value half of the S&P 500. When you see things like XLP up 0.7, XLU up 1.2%, KBE banks up 1.7, oils positive, XLB basic materials up 0.8%, while XLK and XLY were negative. You can tell we've just gotten stretched a little bit too far to the upside in these growth names, and rotation today into value type names. And this is why we love the S&P 500, because all that rotation takes place within there, whether you're going from growth to value or sector to sector. If you're selling one sector to buy another, when I say I'm really talking about the big institutions. They wake up in different moods every morning and just decide they want to rotate money around, and all that rotation takes place within the S&P 500. That's why it's so difficult for large cap active mutual funds to beat that benchmark. So here are the bottom line for the numbers. The big 7 underperformed, down 0.66%. The RG8, these are small and growth leaders. Our 8 growth ETF composite outperformed, up 0.78%. S&P up as much as nearly 0.5%, pulled back down 0.1%, but the equal weighted up 0.68%. NASDAQ 100 down 0.39%, equal weighted just about flat. Dow up 0.33%, mid caps up 0.9, Russell 2000 small caps up 1.75, Global 60/40 up 0.10%, in-house GROTECTION up over 0.7 at one point, but then some of the leaders in the indexes reversing, ended up just barely negative by 0.2%. Let's get into the charts and the tail of the tape. We'll start off with the S&P 500 here. Get rid of the stochastic so we can have a better view. So you can see how strong this trend has been. One touch of the 21-day moving average, well, 2 touches, but just a little too far extended above the 5,000 level today. That was nearly 6% before we reversed. Still 5.1% above the 50-day moving average at the close today. Just a little too far, too fast. NASDAQ 100 was nearly 7% above at its high, above the 50-day moving average before its negative reversal, bringing it lower on the day. Dow Jones Industrial Average up 0.33%, continues to ride the 8 EMA higher. A little bit of relative strength today. Mid caps breaking out here. Base on base, cup base, followed by really a high handle or a flat base, and you can see the breakout above that level today, something we've been waiting for. This breadth coming to the market, we're finally getting it, and 3 strong up days on small caps as well, coming into the top of really a similar pattern, but it's showing, no, it's showing the same way, a cup and then base on base, a flat base on top of that. So good stuff there. Even while we were rallying this morning, we didn't trust it because the VIX was up all day long, gapped above the 15 to 21-day moving averages. Not sure why, maybe just because we're a little extended, maybe because CPI is going to be updated before the open tomorrow morning. But up 7.73%, kind of out of whack with what you would have expected for what you saw on the market. Dollar, not a whole lot of movement here. Bounced at the 8-day exponential moving average, ended just barely positive. Gold down 0.26%. Bitcoin in rocket mode, crossed 50,000 today, back above the highs, or it briefly crossed the highs of the infamous 111 Bitcoin spot ETF day. So it's reclaimed all those losses now, up 5.7% on the day. Bonds in a tight range today, slightly up. That's the Braun Bond Index TLT, slightly up. That means slightly down on the yields, down 0.25% on the 30-year, 10-year, down 0.36%. That's our inter-asset correlation. Let's hit the tail of the tape now. So Bitcoin tops 50K and CPI before the open on Tuesday. Those are the two news items. Day count up 6 out of 8 on the S&P, but a negative reversal off the top here again. We've been talking about how extended we've been, and this is why we've been trimming some things, looking for this pullback. If everybody's expecting a pullback, though, will it actually happen? I don't know, but seasonality gets really bad beginning next week, possibly front-running that and locking in some profits. But again, these AI tech leaders were just really extended to the upside. So it's day one of that pullback. See if you get a day 2 and a day 3. That's when we really start to start worrying. As far as sectors go, a lot of non-tech sectors doing well today. Builders, Bitcoin, oils, ARK-K. That's tech, but it's small and mid-tech. And again, money's been flowing into small and mid names. KRE, regional banks, biotech, solar, and retail on the downside. Pretty much all software and or tech names. As far as what we did to the portfolio, did some trimming. Uber has broke below its low of its earnings day. That's showing weakness, not follow-up strength. We'll take a look at that chart in a minute. And then CrowdStrike, an evening star pattern, we trimmed a little bit more of that. And AMD, the buy that we did last week, briefly termed negative, we trimmed some of that. So bottom line on the day 3 of small and mid caps leading, but many tech AI overbought leaders had a negative reversal, and value stocks outperformed today. So very clearly some rotation going on, and let's start that rotation. Let's go to Uber first, since that's what we trimmed. Uber, this was their earnings day, initially sold off and then closed higher, had a second higher close the day after, but closed in the bottom of the range. That's the second candle of a 3-candle combo. Briefly got into the day 1 candle, but cinched it today and closed below the 8-day exponential moving average. Hadn't done that since going back here on 131. And with things being extended, no follow-up strength. Note volume was light on these last 2 days of the pullback today. Still holding most of our position with some nice gains, but we did trim a little bit of Uber today, as well as CrowdStrike. As I said, another evening star type pattern today, just getting a little too extended. We took some off when it was plus 4 ATR on Friday, pulled back a little bit more and filled the gap. We took some more of that off today, booking 30-ish percentage gains on that. And then AMD, the negative reversal with all the other AI stocks. And this one not showing the relative strength that some of the other names are. So it is forming quite a triangle here while it consolidates. And if it breaks out of there with authority, it would be a reason for an add. But let's take a look. NVIDIA today finished at $722, $24 off the high. Again, just too extended, pulling back now. Crazy action in ARM, was up 40% at one point, still closed in the top of the range, but only up 29% on the day. What a crazy move this has been. And then you got SMCI ran into a Livermore level today and reversed. That's the 800 level. It also did it at 600, but then powered through it. Powered right through 700 like it wasn't even there. Note just riding this 8-day, really, I can put a 5-day up here and you'll see it's riding the 5-day exponential moving average, but still ended up positive for the day by 4.42%. Let's look at some of these leaders that reversed. GitLab, one of them, attempted to break out, pulled back. Spotify, another leader, broke out higher on earnings, pulling back today. We showed Crowd, we showed AMD, we showed Uber. VRT, very strong stock, just a little ahead. Earnings coming up in about a week and a half, negative reversal today, still above the 8-day exponential moving average. Nutanix had been extremely strong, first closed below the 8-day exponential moving average. Let's see what else. After hours, we've got Cadence, CDNS. It's an AI software stock, down 6%, was down more than that, but breaking the 300 level and the 8-day exponential moving average. And also ANAT after hours today, another network AI stock with a negative reversal today and down another 6% after hours. So just might be some time for these stocks to cool off and rotate into some other sectors, those sectors being within the S&P 500. That's why we've been trimming. Our leaders, just getting too extended, we'd like to book the gains and regroup for the pullback that we know inevitably will come. We'll come back to the 21, then we'll come back to the 50-day moving average. In a true bull market, we'll bounce off there and go higher. If there's more things going on with the economy or geopolitical wise, we'll cut those levels and continue to go lower. Our open balance at risk is about 5% right now off the highs, and all of our stops are in place and updated. That's going to wrap it. As always, I'd like to hear from you. The email is don@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. If you're interested in becoming a client, my partner, Dan Stewart, would love to read your email or take your call. Our flagship portfolio is called GROTECTION because it serves a dual purpose, growing assets during uptrends, protecting them during downtrends, especially when we get below this black line, the 200-day moving average. That's where all, and I mean all, bear markets occur. You can read these, just stay away from when the market is at its riskiest, and that's below that black line, and you can compound gains from a higher rate by protecting your capital. That's going to wrap it. As always, leave like and subscribe on YouTube. We answer all of your comments there, and appreciate you spreading the word about what we do here at Revere Asset. We're not like other managers in any way, shape, or form, other typical pie chart asset allocation managers. And with that, we'll wrap it for Monday, February 12th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.